Is Bitcoin dead? Again, if you've looked at the charts recently, you might be feeling a little nervous. After hitting incredible highs, Bitcoin has taken a nosedive, and everyone's asking the same question. Is this the end of the bull run, or just another Tuesday in crypto? Stick with me, because we're going to dive deep into what's really happening behind the price action. We'll look at the data, not the drama, and uncover what the smartest minds in the space are saying about where we go from here. First, let's talk about the elephant in the room, the price drop. It was sharp, it was fast, and it wiped out billions in market value. This kind of volatility is classic Bitcoin, but it always stings. So, what triggered it? It's not just one thing, but a perfect storm of factors. We've got major macroeconomic pressures at play. Think about it. Inflation is still a huge concern globally, and central banks are responding with tighter monetary policies. Higher interest rates make safe investments more attractive, and that can pull money out of riskier assets like crypto. This isn't just a Bitcoin problem. We're seeing this ripple across all financial markets. But let's zoom in on the crypto-specific factors. We saw a massive amount of leverage in the system. When prices started to dip, it triggered a cascade of liquidations. Basically, traders who had borrowed money to bet on higher prices were forced to sell, which pushed the price down even further, triggering more liquidations. It's a brutal cycle that can accelerate a downturn very quickly. This is what's known as a leverage flushout, and while painful, it's often a necessary evil to reset the market and build a healthier foundation for the next move up. Now, let's look at some interesting data from Google Trends. Searches for Bitcoin have definitely spiked, but not to the levels we saw at the absolute peak of the last bull run. What does this tell us? It suggests that while the recent crash caught people's attention, we haven't reached that level of mainstream mania or widespread retail panic just yet. The interest is more from people already in the space, checking the pulse of the market, rather than a flood of new speculative buyers. This could be interpreted as a sign of a more mature market compared to previous cycles. The tourists might have left, but the residents are still here, watching closely. And those residents include some very big players. This is where the story gets really interesting. Despite the price volatility, institutional adoption continues to march forward. We're talking about the big Wall Street firms, the pension funds, the endowments. The launch of Bitcoin ETFs earlier this year was a monumental event. It opened the floodgates for a whole new class of investors to get exposure to Bitcoin through their traditional brokerage accounts. And the inflows have been staggering. Even with the recent price correction, these ETFs are still holding a massive amount of Bitcoin. This tells us that institutional investors are playing the long game. They aren't panic selling at the first sign of trouble. They bought into a long-term thesis about Bitcoin as a store of value or a digital gold. This institutional demand provides a strong support level for the price that simply didn't exist in previous cycles. Back in 2017, it was almost entirely a retail-driven market. Today, the landscape is completely different. The presence of these large, patient capital allocators adds a layer of stability and legitimacy that can't be overstated. So, we have this fascinating dynamic. Short-term panic and leverage unwinding, clashing with long-term institutional buying. It's a classic tug-of-war between weak hands and strong hands. The weak hands are shaken out by the volatility, selling at a loss, while the strong hands, often the institutions and long-term believers, see these dips as buying opportunities. The big question is, who will win this tug-of-war? To answer that, let's explore a few potential scenarios, like the analysts do. We'll call them the bear case, the base case, and the bull case. First, the bear case. This is the scenario where the pessimists are right. In this version of the future, the macroeconomic headwinds become too strong to overcome persistent high inflation forces central banks to keep hiking rates, plunging the global economy into a deep recession. In that environment, investors flee from all risk assets, and Bitcoin is no exception. The ETF inflows dry up, or even reverse, and the price breaks below key technical support levels. We could see a prolonged crypto winter, with prices falling back to the lows we saw in the last bear market. Maybe even testing the $30,000 range or lower. It's a grim picture, but one we have to consider. Next, let's look at the base case. This is the most likely scenario in the eyes of many analysts. In the base case, the market chops around for a while. We'll see periods of volatility, both up and down, as the market continues to digest the macro news and the institutional flows. The price might bounce between, say, 50,000 and 70,000 for a few months. This consolidation phase is healthy. It allows the market to shake out the remaining leverage and build a solid base of support. The ETF inflows continue at a steady, if not spectacular, pace. Eventually, as the macro picture clears up and a new narrative emerges, the market will be primed for its next leg up, perhaps later this year or early next. This is the sideways and then up scenario. Finally, the exciting one, the bull case. This is the scenario where Bitcoin absolutely rips higher. What could cause this? A few things. Imagine the Federal Reserve signals that it's done with rate hikes and is about to start cutting. That would be like pouring rocket fuel on risk assets. Money would flood back into the market. At the same time, maybe a new wave of institutional adoption kicks in. Perhaps a major sovereign wealth fund announces a Bitcoin allocation, or another wave of ETF products get approved in other major economies. This combination of easy money and massive new demand could send the price soaring past its previous all-time high. In this scenario, analysts are talking about targets of $150,000, $200,000, or even higher by the end of this cycle. So, which one will it be? The truth is, nobody knows for sure. Anyone who tells you they do is trying to sell you something. What we can do is look at the evidence. The institutional adoption is real and provides a powerful tailwind. The macroeconomic environment is a real headwind. The market is currently caught between these two massive forces. My personal take: I'm leaning towards the base case with a bullish tilt. The short term is incredibly noisy and unpredictable. Trying to time these dips and rips is a fool's game. But if you zoom out and look at the bigger picture, the fundamental thesis for Bitcoin seems stronger than ever. The introduction of ETFs has fundamentally changed the market structure. We now have a constant structural bid for Bitcoin from the traditional finance world. This is a game changer that didn't exist in any previous cycle. So, what should you do? This is not financial advice, but the wisest move is often the most boring one. Have a plan and stick to it. If you're a long-term believer, these dips can be opportunities to accumulate, but do it responsibly. Don't go all in or use leverage. Dollar cost averaging is your best friend in a volatile market. If you're a trader, be cautious. The market is choppy and can humble even the most experienced players. The story of Bitcoin is far from over. This is just another chapter filled with its own unique twists and turns. The battle between short-term fear and long-term fundamentals is raging, and it's fascinating to watch. The key is to separate the signal from the noise, to focus on the underlying trends rather than the daily price swings. The institutional wave is here, and it's not going away. That, more than anything, gives me confidence for the future. Thanks for sticking with me through this deep dive. It's a complex topic, but hopefully this gives you a clearer picture of what's really going on. What do you think? Are you a bear, a bull, or somewhere in the middle? Let me know your thoughts in the comments below. If you found this video helpful, be sure to hit that like button and subscribe for more content that cuts through the hype. Until next time, stay safe and stay informed.